Welcome back to Explain the Charts, your trusted source for in-depth market insights. Today, July 22nd, 2025, we're turning our attention to Intel Corporation, ticker Intel, a stock at a pivotal moment in its journey. The tech giant is currently trading at $23.26, showing a slight increase of 0.69% as of today, July 22nd, amidst broader bullish market activity. Let's begin our technical journey by looking at the daily chart for Intel, encompassing over a year of comprehensive price action. We can clearly identify a significant and prolonged downtrend that began in March 2024, where prices peaked around $43 to $45. This period was characterized by consistent selling pressure, with Intel struggling to establish any meaningful upward momentum or stable price floor. A particularly sharp decline manifested in early August 2024, witnessing the stock plummet from the $29 range down to approximately $21. This dramatic drop was accompanied by an explosive increase in trading volume, strongly suggesting a market reaction to a major negative news event, likely a disappointing earnings report, which aligns with the current concerns about Q2 revenue. The stock subsequently hit a new 52-week low of $17.67 in early September 2024, decisively establishing this as a crucial long-term support level. Following this significant low, Intel entered a phase of consolidation and a gradual, albeit volatile, recovery, oscillating largely between $19 and $22 through the latter half of 2024. However, February 2025 brought a notable reversal, with a remarkable surge that propelled the stock to a high of $27.55 by the 18th of that month. This rapid appreciation, underpinned by exceptionally high trading volume, hinted at strong bullish conviction, perhaps fueled by early optimism surrounding AI PCs and data center demand. Yet, consistent with the broader downtrend, this rally proved fleeting and was swiftly followed by a sharp correction, pulling prices back down towards the $24 mark by early March 2025. Another substantial downturn was observed in early April 2025, when the price sharply declined from over $22, once again approaching the September 2024 lows around $18. The repeated successful retest of this $18 to $19 support zone and its subsequent bounce on both occasions unequivocally confirms the resilience and significance of this demand area for long-term investors. If we now narrow our focus specifically to the period from early April 2025 through to the end of July 21st, we can observe a more constructive, albeit measured, recovery in price. From that robust $18.13 low on April 8th, Intel has consistently managed to form a series of higher lows, subtly hinting at the formation of a nascent uptrend on this intermediate timeframe. The stock has successfully navigated and decisively broken above the $22 to $22.50 price range, which previously acted as a notable resistance zone during late 2024 and early 2025. This $22 to $22.50 zone has now effectively transitioned into a key intermediate support level, which bulls will aim to defend. The most recent daily candle, closing at $23.26 on July 21st, positions Intel directly within the vicinity of its current overhead resistance, suggesting a critical standoff. The daily volume during this recent upturn has been moderate, indicating accumulation but not necessarily the explosive buying seen during prior large rallies. Shifting our lens to the hourly chart, let's scrutinize the very recent short-term price dynamics from early July. On July 8th, Intel delivered a powerful bullish surge, dramatically increasing from approximately $22.15 to nearly $23.80 within a single trading day. This significant upward movement was critically supported by a notable increase in trading volume, reinforcing the presence of strong buying interest. Following this impressive rally, the price has primarily engaged in a period of consolidation, largely trading within the $23.40 to $23.80 range for several subsequent days. This consolidation pattern, occurring on relatively high volume, clearly indicates that both buyers and sellers are actively engaged at these current levels, effectively setting the stage for the stock's next decisive move. This recent strength, combined with the earlier AI PC news, suggests some market participants are already pricing in positive developments. Now, zooming in even further to the 15-minute chart, specifically for July 21st, we can analyze the intricate micro-movements leading right up to the very moment of this broadcast. Early in the trading day, Intel was seen consolidating around the $23.30 mark, characterized by relatively tight price ranges and somewhat subdued trading volume. However, precisely around 13:19 Universal Time Coordinated, coinciding with our current analysis time, we observed a distinct upward spike, briefly propelling the price towards a high of $23.745. This sudden burst of short-term volatility vividly underscores the market's heightened sensitivity to even minor news flow or subtle shifts in intraday sentiment as the critical earnings report looms. The subsequent retreat, or pullback, to the $23.20 to $23.35 range by the end of July 21st suggests that some immediate profit-taking occurred, or perhaps a renewed sense of caution set in among traders. The current analyst average 12-month price target of $22.38, implying a slight decrease from the current trading price, further reinforces the cautious sentiment prevalent among financial institutions. This intricate interplay of short-term rallies and immediate pullbacks demonstrates that the stock is unequivocally at a critical juncture, balancing both near-term headwinds and promising long-term potential. Now, let's consolidate all our observations on the daily chart to formulate our overall outlook for Intel. Reasons to be bullish on Intel are compelling, particularly its strategic pivot towards the high-growth AI PC and data center markets, backed by innovative products like the Xeon 6 processors and Gaudi 3 AI accelerator. Furthermore, Intel's proactive implementation of significant cost-cutting measures and restructuring initiatives could substantially improve its operational efficiency and long-term profitability, positioning it as an attractive long-term investment for patient capital. From a technical perspective, the repeated and successful defense of the $18 to $19 support zone, which includes the 52-week low, stands as a powerful testament to underlying demand at these lower price levels. However, short-term bearishness remains a significant consideration, primarily driven by the impending Q2 2025 earnings report scheduled for July 24th. Analysts widely anticipate a revenue decline and minimal adjusted net income for this quarter, creating a potential downside risk. Compounding this uncertainty is the scrutiny surrounding Intel's Foundry business, with ongoing speculation about potential write-offs and a challenging shift in focus from the 18A to 14A nodes. The prevailing hold ratings from the majority of analysts, coupled with a cautious average 12-month price target that is slightly below current levels, collectively suggest limited immediate upside potential for the stock. So, to recap, what are the absolutely critical price levels to monitor, and what are our unbiased predictions for Intel? On the downside, the immediate support zone to watch is between $22.50 and $22, which, if broken decisively on volume, could lead to a rapid retest of the stronger $19 to $18 area, ultimately targeting the robust 52-week low of $17.67. Conversely, on the upside, immediate resistance is found in the $23.50 to $24 range, representing a psychological and technical hurdle. A more significant challenge lies at the $25 to $26 zone, which has proven to be a strong ceiling in prior rallies. A decisive breach above $26, especially on strong volume, would signal a potential continuation towards the February 2025 high of $27.55. Unbiased short-term prediction: a pullback towards the $22 to $22.50 area after the earnings release is highly likely, in my opinion, with approximately a 70% probability. This outcome would be strongly reinforced if the Q2 results meet or fall below the already cautious analyst expectations, particularly concerning revenue figures or any negative forward guidance from management on Foundry execution. Unbiased long-term prediction: a sustained rally above $24, potentially propelling the stock towards the $25 to $26 range, is moderately likely, around 50% probability. This scenario hinges on Intel delivering a significant positive surprise in its Q2 earnings, especially regarding the performance of their AI initiatives, or providing a much more optimistic outlook for the challenging 18A process technology rollout. For long-term value investors, strategically building positions near those robust support levels of $19 or $18, particularly if the earnings report triggers a short-term dip, could present an opportune entry point. Traders must pay extremely close attention to the Q2 2025 earnings call on July 24th, immediately after market close, as this event will undoubtedly serve as the primary catalyst dictating the stock's next major directional move. Always observe volume confirmation on any significant breakouts or breakdowns. Strong volume adds essential credibility to the price action, signaling genuine market conviction. Lastly, keep a vigilant eye on any subsequent news or developments surrounding Intel's ongoing Foundry business turnaround and its competitive advancements in the rapidly evolving AI landscape, as these fundamental factors will critically shape its trajectory far beyond the short term. That concludes our in-depth analysis of Intel today on Explain the Charts. If you found this video insightful, please give it a thumbs up, subscribe to our channel for more detailed market breakdowns, and hit that notification bell so you never miss an update. Thanks for watching, and as always, happy trading!